All right, everybody, welcome into Mining Stock Daily on this Monday and some much needed kind of just market commentary and analysis. His time here today is precious, so we're going to try to get as much in as we can within the next 10-15 minutes with Peter Boockvar of Bleakley Advisors and author of the book Report. Peter, I would say the last 24 hours from Wednesday, you have been pretty outspoken with just how dangerous of decision these tariff policies were after Wednesday afternoon after the market closed when they were announced. Your note here this morning again kind of reiterated just the volatility that this is going to present, not only for U.S. consumers but really for the market as we are seeing. And we could take this so many different directions, but as we talk today, we've seen huge swings in the market. There's a lot of dip buying attempts going on. How are you watching these huge swings today, and should this any sort of move up potentially be faded?
Right.
There's a lot of questions in there.
I'm trying to think where to start. Okay, let's focus obviously on, before we get to tariffs, I think there was a sort of a vulnerability that was sort of beginning to grow in the markets before we became worried about tariffs. And that was the DeepSeek news in late January that I think sort of ended the AI tech trade in terms of its dramatic outperformance and its ability to carry the market on its shoulders. And I think that was a major sort of turning point where a third of the S&P, or even more, 35% of the S&P, we were sort of losing in terms of its leadership. And we saw a lot of the money go internationally. European markets traded very well. Markets in Asia, ex-Japan, traded very well. And then, of course, everything has changed with this focus on tariffs. And, a couple things. So we started out with tariffs being used. Now, we have the experience, of course, with 2018, where there was tariffs across the board on China, particularly across the board around the world on steel and aluminum. And I've yet to see any evidence of any benefits whatsoever from that tariff battle. And in fact, it sent U.S. manufacturing into recession, and before you know it, the Fed was cutting interest rates in 2019. So fast forward to now, originally the tariffs, okay, we're going to use it as a hammer to achieve some non-economic goal like protecting our borders with Canada and Mexico. Then it became, okay, we're going to defend and protect domestic industries like steel and aluminum again, even though you had Alcoa, a big aluminum company, saying, please don't do this, which is kind of ironic. And then wondering whether tariffs are going to be used just to raise money to offset the expiring Trump tax cuts. Then it became reciprocity, and then it became just a sort of a blanket tariff on the whole world because we want to reshore manufacturing to the U.S. So then I think it was sort of narrowed down to, okay, we want to reshore and we want reciprocity. But then when we learned on April 2nd, so-called Liberation Day, it was more of Deception Day, where the math and ratios that they presented to us were not really tariffs that foreign countries are slapping on us. It was more of just some cockamamie formula that measured exports relative to the trade deficit. One of the problems with this whole discussion is twofold. Number one, there's this inherent base belief, and that Trump's had since the 80s, that trade deficits are bad. Mm-hmm. And if I have a trade deficit with you, you have a surplus with me, somehow you're ripping me off. Even though I probably have a services surplus with you, that doesn't show up in this conversation. It somehow is only goods. So that means that when Walmart buys goods from China that Walmart then sells in their U.S. stores, that somehow China is ripping off Walmart and then ripping off the consumer who's shopping at Walmart. Meanwhile, Walmart, through this strategy of having a trade deficit with their outside suppliers outside the U.S., is all of a sudden magically became the largest employer in the country with 1.6 million employees. but China has benefited, Walmart's benefited, the consumer has benefited. I'm getting my hair cut on Friday. I used this in my note today, and I am going to pay money to Nicole, who's going to cut my hair, and she's going to have a trade surplus with me on services. I'm going to have a services deficit. But I don't think she's ripping me off. I think she's providing me with, a fair price for a good haircut that I think she gives me. Good enough that I go back to her each time. So I have a trade deficit with her, but she's not ripping me off. So this whole idea is just nonsense. Now, with respect to lost manufacturing jobs, yes, I understand we want to reshore. We want to produce more things here. I get that. But since World War II, we've seen a slowdown in manufacturing employment with, yes, there are countries that took our jobs, but also technology and production efficiency has also reduced the need for workers. We've had more automation, more robotics in our manufacturing facilities. But let's just say we didn't. Let's just say we're doing this because we want to reshore. The question is, will we be able to reshore by just throwing up walls around the country? And are tariffs going to be the ticket to a manufacturing renaissance in the U.S.? Maybe, but I would say most likely not. Because what you're doing is you're walling off the U.S. from the rest of the world. So a U.S. manufacturer in the U.S. will really only produce in the U.S. for U.S. customers. Because we're going to price ourselves out of the global export market. Manufacturers around the world are going to be able to produce the same things at a cheaper price. Maybe they can't sell into the U.S. market because of tariffs, leaving it to us, but the U.S. exporter, or to say the U.S. manufacturer, is going to lose its export market. So what's the net result? Probably we'll be worse off. There was a manufacturer that I read about on Friday in the Wall Street Journal from Wisconsin that has 3 plants in the U.S. I think it has a plant in Europe and India, maybe even China. And he said, you know what, instead of encouraging me to hire more people in the U.S., I'm actually, for my European customers, I'm probably then going to build a factory in Europe and shift jobs there and to build for my European customers and probably cut jobs here because it costs too much money to get intermediate term goods. And about half of all U.S. imports are intermediate term goods. And Peter Navarro on CNBC told us what he wants. He wants a car made in the U.S. and every single piece of that car to also be made in the U.S. So that's their goal. And yeah, we'll have a wall around the country and we're only going to be able to produce for a domestic market because we're going to lose cost competitiveness with the rest of the world. So how that's going to benefit us all, I'm not sure. In the meantime, the tactics they've taken, they're literally freezing global trade, and they've tanked the markets and cost shareholders trillions of dollars. So that's it.
I guess everything's fine. Everything's fine. I mean, at least you get to spend some time with Nicole and get a fresh haircut here, Peter. That always makes a man feel better. But the question still remains: is the short-term pain going to be worth the long-term gain? And even if that long-term gain is achievable in the way this administration pictures it to be, they have this very kind of big idea of what U.S. manufacturing is supposed to look like, and you can't just flip the page on one day on April 2nd and expect things to be just rainbows and sunshine at the end of it. There is obviously there's going to be reciprocity throughout global markets because of it, but again, if we think about this, wanting to bring manufacturing back the way things potentially used to be post World War II, the economies are completely different. The way things are produced are completely different. Trade is completely different. And it really seems like this idea of theirs is really out of touch in many ways. And then I also, at the side of it, like I understand who they are trying to work with here. They are trying to provide that, 88% of people only own 12% of the stock market. I get that. And so they don't really care about the equities. They don't care about, numbers go up type of thing. They are trying to provide a better foundation for middle to lower class. And I totally understand, because the system just hasn't been working for everybody as one would want to. But the way going in one fell swoop with a couple charts and showing, some cockamamie way of adding tariffs to people, it just certainly was not the way to do it. But I guess the question is, what would have been the way to do it? What would have been the better solution if this is what they wanted to do?
All right, well, a couple things. Number one, I applaud Trump in his first term for cutting the corporate income tax rate from 35 to 21. How about cutting that to 15, which would undercut a lot of our foreign trading partners and make us more productive and competitive, price competitive. A deregulatory push was a big part of this administration, right? That's what we were hoping. You slash a bunch of regulations, you make us cost competitive, you encourage production domestically. You go through a whole retraining process of trying to build the skills in the workforce to be able to man an assembly line. There are ways we could have made us cost competitive without pissing off the entire world and losing the entire world as a potential export market. And I cannot lose the opportunity to also, with a lot of the worries about income and wealth inequality and the challenges that our economy has, the Fed has a lot to blame for this. The Fed has made the cost of living in this country cost prohibitive for many people, particularly when it comes to buying a home. The average price of a home is up 50% over the past 5 years. A lot having to do with the Fed and this aggressive fiscal policy that we saw. So if you can't afford to buy a house, you get foreclosed because you can't afford payments, you're going to be pissed off. And is it because we don't have enough manufacturing jobs, or is it a broader set of things? And the Fed turned the housing market upside down, and I'm honing in on the housing market because, the cost of living is obviously, of shelter is probably one of the most important things that someone can focus on. And, they turned the housing market upside down for 20 years now, going back to Greenspan. So there's more blame to go around than, okay, China's stealing our manufacturing jobs.
Yeah. Yeah. But if we talk about the Federal Reserve, I couldn't tell you how many people I was having communications with Friday afternoon, and even yesterday after the futures opened, the Federal Reserve is going to cut interest rates. All of a sudden, that Fed put got moved up to almost necessity right away. And my response was I am not certain. I could not disagree with you more, because I think Jerome Powell on Friday afternoon made it clear that they are not in a hurry, and they don't care if the market's down 20%, because you're still back to where you were in 2022.
Well, the on one hand, they could act, but only if credit markets started to freeze up. Mm-hmm. The last thing Jay Powell wants to do is bail out Donald Trump for his stupid tariff policy that is basically kicking the ball in your own net. Powell wants nothing to do with bailing that out.
Yeah.
So, and also Powell's gone in a year, May 2026. And Powell knows his legacy is going to be more focused on his fumbling the ball on inflation and trying to recapture that ball and score. And I don't think he's going to accommodate a tariff-driven, stagflationary type recession via rate cuts. And if we've learned anything since they started cutting in September 2024, was just because you cut short-term interest rates doesn't mean long-term interest rates go down. They went up instead.
Mm-hmm. Yep, 100 point spread between the two. Okay, Peter, I know time's precious. I'm going to let you go. Thank you for spending some time with us and some insights. The letter every morning, every day has been spot on for the last couple of days. So thanks so much for writing it. We'll chat with you again soon.
Thanks, Trevor. Appreciate having me on.